just realized I don't have my speakers. Let me go grab them. Okay, I'm gonna cut that off for now because I feel like that is disturbing me. Now let's see. Can you all hear me okay? I have to plug my speakers back up. If you are watching, can you hear me? Can you hear me? Can you hear me? Perfect. Thank you, Wayne, for commenting and letting me know. Okay. I'm like, I forgot that I moved my speakers. So I have to go get my speakers. So, okay, let's get to it. Because we have a town hall tonight at 6:30. So I know people are going to be coming. I don't know why I feel like I'm dark. It just may look like that way to me. So let me see. Then I just want to get on one more platform. So while I log into Facebook real quick to get on my Facebook channel, let me know what city and state you all are watching from. I'm getting ready to get back to my normal type of content. I know I've been going hard for Chicago. But as I like to remind you all, I am about the money, right? I focus on the finances, follow the money. Okay. So today I wanted to talk to you all about a banking product that a lot of people are not familiar with or don't necessarily know about. Okay. If you're new here to the page and the channel, welcome. I am Patrice L Stewart, better known as the Realist Tax and Business Strategist. And today we're going to be going over how to borrow against your savings account. Okay. Right now we got Philly, we got Chicago in the house. Let's roll. Let's roll. So as I said, as you all are tuning in, just let me know what city and state you're logging in from. So right now, next month is getting ready to be very busy for the holiday shopping season, right? And again, because I'm in financial services, I see so many people, I don't want to say blow your money, but I see so many people spend their last dollar, okay, on trying to buy gifts, trying to do things for the holiday. And so I want to share with you all a banking tool that you can utilize. So this way you're not completely depleting your savings. Okay. And then for those of you all that are watching, please like this video. You can also share this video, but the type of content that I provide here on my page and my channel, people charge you for. Okay. So I'm doing this completely free here on my page and my channel. So all I'm asking you to do is like the video, and especially if you like the content, to follow the page. All right. So the first thing that I want to go over is the example that I'm going to use. Okay. It's Navy Federal, but you can do this with any credit union. So what I'm going to do first is give you the banking terminology. All right. Everything that we talk about here, we're going to give you the banking terminology. All right. The facts. So make sure that my volume is all the way up so you all can hear me clearly. Okay. So what this is, it's called a savings secured. Okay, great. Y'all can see that loan. Okay. This is the bank terminology, bank terms. All right. Now, the example that I'm going to use is with Navy Federal. Navy Federal Credit Union. Okay. The first thing I want to say is you are only doing this with a credit union. You are not doing this with a big box banking institution. All right. Most credit unions offer this. So with Navy Federal, it's called the pledge loan. With another credit union, it may be called something else. But the bank terminology is called a save and secure loan. All right. Now, let me just say this real quick. If this is not something that is for you, it's not for you. All right. I like to start from the basics, the bottom level, and then work our way up because we have a lot of people who are not familiar with this type of thing. So if you have great credit, if you already have savings, you know how to invest, then this content may or may not be for you. All right. Let's just get that out there because in the past, that's what we've heard. Right. So I like to teach from the level, the basics, and then go up. Okay. So all of you all may or may not be familiar with this. So I'm gonna give this example. Okay. Maybe right now you want to take $5,000, right? And maybe you need to fix your roof, right? Let's not use the example of the Christmas or holiday shopping, right? Maybe you need to fix your roof. And maybe $5,000 is all you have saved in your savings account. That's your last $5,000 to your name. Okay. One, you might want to do this type of product because this savings secure loan allows you to borrow against your savings account. Okay. And so I'm going to show you and we're going to break the steps down on what that looks like. I recently posted a video on my page and my channel that says save a secure loan. You all can watch that clip to also get another example of what I'm going to go over today. All right. But this way, what you're doing is you're borrowing that $5,000 that you have in the bank for a very, 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 very low interest rate. Okay. Now, with Navy Federal, my loan was 2.25%. So there are some credit unions that go up to 3%, 3.5%. I actually do have a list of 20 credit unions. I'll give you all that information at the end on how you can access that. But I do have a list that I've created personally of credit unions that do this loan and also the information and the links there. So that way you can go on there and you can look and see how you can get in with one of those credit unions. Again, it's 20 different credit unions on that list. All right. But what you want to do is you want to get with a credit union and you're going to do this product. It's called a save and secure loan. So you're borrowing your own money, but at a very low rate. All right. Now, someone would say, well, why would you do that? Everyone does not know how to save. That's just the bottom line to it. If everybody knew how to save, then we wouldn't be having this conversation. Okay. I don't remember the exact percentage of Americans, but I'm just going to say a large percentage of Americans do not even have $1,000 in their savings account. Okay. It's very hard for people right now. So everybody just doesn't know how to save, right? But if you are responsible and you know how to pay your bills and you want to build yourself back up over time, this will be a very great tool that you can utilize to borrow against your own money. All right. So you're going to take that $5,000 from your savings account And what you're going to do is you're going to borrow against it. Well, I'm going to break it down right now, how you're going to do that. All right. I want to use a different piece of paper because I want you all to still be able to have your information up there. Now, I also am going to do this example with how I did it. All right. I don't always want to use low dollar amounts with you all because I want you all to get into the habit of knowing that you're going to have $20,000, $30,000, $40,000 available to you. Okay. So the way that I did it, okay. I really need my, this is like I really need. This is for the dry erase. Oh. You don't want to stay up there for me tonight? Okay. I gotta get some new markers, y'all. Lord, I'm sorry. This one not that dark either. Okay, there we go. All right. So what's going to happen is on Monday, you have a checking account and you have your savings account. Okay. So on Monday, maybe you have 1,000 in your checking. Maybe you have, I knew that was about to happen. I might got to get some tape to stick on here. I just wiped this board down. Hold on, y'all. Sorry, one moment. I don't want to use my other paper. Hit that like button on this video for me if you're watching. Hit that like button. And let me know where you logging in from, what city and state. Okay, so you might, on Monday, we're going to just use this as the example how I did it. Now, on Monday, you got 1,000 in your checking. You might have 10,000 in your savings. Okay. So what you're going to do is you're going to call the bank. Okay. You're going to call the bank. Let's say call the credit union because I want to be specific. This is a credit union product that you're doing. You're not doing this with a regular big box bank. So let's be specific. You're going to call the credit union. CR is credit union. All right. You're going to tell them that you want to do the savings secured loan. Savings secured loan. All right. Now, even though you have 10,000 in your account, you don't have to borrow 10,000. Borrow what you need. So if you need to borrow 5,000, you need to borrow 7,000, right? So whatever dollar amount you want to borrow, that's what you're doing, okay? But for this example, we're just going to use the whole 10,000, all right? So you're going to call them on Monday. They're going to do they are going to do a credit check. I do want to say that they do a credit check. Normally with Navy Federal, they'll pull your TransUnion credit report. All right. You will see an inquiry on your credit for the loan. Because remember, this is still a loan, but you're doing this for two different reasons. One, you want to borrow this money and you want to build your credit because you can do both. Okay. So with this one, they're going to put a hold on these funds. All right. So once you call, they're going to put a hold on this money. Okay. So we're going to put a hold. Right. So then when they put it on hold, you don't have access to it. Right. It's going to be on hold. So you don't have access to those funds anymore. Why? Because they are creating you a loan. So when you log in on Monday, you only got your checking account and savings account. Now, when I did this 2 years ago, it took them 3 days. I did it again I think last year or the year before, and they put the loan on the account the next day. All right. So now they're moving a lot quicker with how they do this process with Navy Federal. All right. So what's going to happen is they're going to put a hold on that 10,000. They're going to create a loan account. Right. So now when you log in, you're going to see a loan number. Right. A long number. Loan numbers are usually long. Right. Something like that. And then you're going to see a loan for the $10,000. Okay. Because that's the amount we're borrowing against the savings account. So when you wake up the next day and you log in, you'll see now you have 3 different accounts. You got your checking, your savings, and now this loan number. All right. Now, they do go up to 5 years. They actually go up past 5 years. I'm not going to say the full term that they go up to, but let me tell y'all, do not do this loan past 5 years. You should not be doing this as a mortgage payment. Okay. So 5 years is the maximum. All right. So for me, I did do a 5-year term. Now you can always pay this loan off early. There's no early payment penalty, but the longer you draw the loan out, the smaller your payments are. Right. So if you choose a 12-month term, your payments are going to be higher. You choose a 2-year term, you get what I'm saying, 3 years, so forth. So you're going to figure that out. When you contact them, you can get on phone with the customer service agent. They will go over your payments with you. So that way you can decide what is the best option for you. The biggest thing that I want to say on here is do not do this if you cannot afford your monthly payments. Okay. I personally did a $30,000 loan. On average, my loan was about $530 a month. Okay. So you want to make sure that you have the money and that you can afford your monthly payment. All right. So you can do all of that on the phone with the customer service agent. You can change your dollar amounts. They can figure things out, let you know what 7,000 would be for 3 years. They could let you know what 10,000 going to be over 2 years. You get what I'm saying? Before you finalize anything, make sure you can afford your payment. I want to be clear on that. All right. So now you got your loan. Like I said, my interest rate was 2.25%. Now, if you all know, normally when you go to a bank and you borrowing money, right? In this case, you're borrowing your own money, right? But you know, when you go to a bank and you borrow their money, you're never paying a low interest rate like that, right? They're charging sometimes 12, 15% at standard banking institutions, right? So even with a credit union, your loans are usually, the rates are usually lower than with a big box banking institution. Okay. So again, that's the reason why we're using the credit union example. Now, what's going to happen is once the loan shows up on your account, they are then going to issue you this $10,000 back to your account. So you have to let them know, where do you want the money to be deposited to, right? So recap. You got 10,000 in your savings account, but you need to borrow this money. You need to do something with this money. Fix your roof, whatever, right? Now what you're doing is you're calling the bank and you're saying, hey, I want to apply for this savings secure loan. They're going to run your credit. I will say you do not have to have good credit. People who have bad credit have received this loan. I've had clients get this loan with a 580 credit score, okay? With Navy Federal, they normally pull your TransUnion. With another credit union, they may pull a different credit bureau, okay? So this is the example that we're utilizing, but I want you to remember every credit union is different as far as even what credit union they pull from, okay? Now, once you call the bank, they're going to put a hold on the funds that you want to do the loan with. As I stated, you may not want to do the loan for the full 10,000. You may want to do it for 5,000 or 7,000. So whatever dollar amount you decide to choose from, right? That's what they're going to put a hold on. Okay. So like I said, for this example, we're using the whole 10,000. So now, right, this is on Monday. So by the time you log in on Tuesday, maybe your loan account actually shows up when you log in online. So now you're going to see your checking account, your savings account, and you're going to see the new loan that you've created. all right, with your monthly payment. Let's see what that is. If I did a $10,000 loan at 5 years with Navy Federal, what would my monthly payment be? Let's just calculate that. Loan. Apply for a loan, auto loan, calculate loan. Let's do loan calculator. Loan payment calculator. Okay, so if I did 10,000 at 2.25% for 5 years, my monthly payment is $176.37. So, payment, what I say, 176.37. 176.37. So this is your monthly payment. Okay. So now let's break this down. Why would you want to do something like this? Okay. Like I said, if you had this money and you don't want to draw every single dollar that you have out of your savings account, right? And maybe you are not the best saver. Now, you did great if you saved $10,000. Let's just be clear, right? But maybe you're just not the best saver, right? But maybe you also are like, well, I kind of need to fix my credit up too. So you can be doing a couple of things with this one product by itself, which is you're borrowing your own money, but this is going to report to the credit bureaus for you. This loan reports to all 3 bureaus, right? So if you borrow this money and you make your payment on time, every time you make your payment, it's also rebuilding back this savings account. Okay. So you're rebuilding your savings account, but then you're also getting this payment reported to your credit report. So that is also helping boost your credit report. Okay. So, and then the third item is maybe you don't have much on your credit report. This is now a personal loan that is reported to your credit report. It's your own trade line. You have pretty much created your own personal trade line, right? So again, those are 3 different things off of this one loan that is helping you overall, right? So now let's break this down. Now, let me take a minute and stop. Do you all have any questions? Right? Do you all have any questions? And then I want to actually go a little deeper and break this loan down as far as how you're paying yourself back over time. If you're new here, welcome. Don't be shy. What we are going over is called a savings secure loan. Just to give you a little bit of background. Okay, this is called a savings secure loan. The example that I'm doing this with today is with Navy Federal because that's who I have my loan through. But you can do this loan with any credit union that offers this product. Okay, this is also a secured. If you pay attention to the word, this is not a unsecured loan. So when you're doing unsecured, you're asking the bank to borrow their money. Okay. In this case, when you're doing any type of secured product, right? You all have probably heard of a secure credit card, right? Maybe those $300 credit cards that you can put $300 on that rebuilds your credit, right? This is a secured loan. So this is another type of product that helps build your credit, but also allows you to borrow against your own money and pay yourself back over time. Okay. So then this sheet I brought up so we can actually do more of the breakdown. Okay. Wayne, you say, did you say they run your credit for this? Yes, I did. They do run your credit. Don't be afraid of that because, again, the credit is not necessarily the biggest factor, especially when you're doing it with a credit union. Again, this is why I'm saying you're doing this with a credit union. You're not doing this with a big box bank, with a big box banking institution. You're going to do this loan product only with a credit union. Credit unions have different standards than regular big box banking institutions. Okay. So yes, Wayne, they will run your credit. All right. And like I said, I have had clients who have had a 580 credit score still get approved for this loan. All right. Because again, the bank is going to make some money, right? Even if it's a low interest rate, 2%, 2.25%, they're still going to make something for you borrowing your own money, right? So at the end of the day, like I said, a lot of times you'll still get approved. So don't let that kind of deter you if you wanted to do something like this. All right. So how do we get to pretty much building this savings account back up, right? Because as I stated, they put a hold on your 10,000 so that way they can create the loan. But the other thing that they do is you get the $10,000 right back. So this way you can go and do whatever you need to do with that $10,000. So when you're doing the application, they're going to ask you, do you want the $10,000 to be deposited in your checking account, or do you want the $10,000 to be deposited in your savings account? Okay. So when I logged into the bank on Tuesday, right, because this was Monday, we called on Monday. So now, when I logged in on Tuesday, I told them to put the money in my checking account because I knew that I was going to use the money, right? So it's up to you. It can go in your checking or your savings. But to show the example and try to make it simple for you, I'm going to put the money in the checking. So again, when you log into your online banking, you got your checking account, you got your savings account, and now the loan is going to show up, right? So now I also have this loan showing up. I don't want to rewrite it over here. So the loan will, goes over here too. So now though, when I woke up, remember I started off with 1,000. So because they put the hold on, they created the loan account. Now they're going to give me the 10,000 so I can go and do whatever it is that I needed to do. So when I wake up on Tuesday, I got 1,000 plus 10,000. So now I have $11,000 sitting in my checking account. And I still have my savings account, but it's going to show 0 available because they put the hold on the money. But really, I have $10,000 here on hold. Okay. But this is how it's going to look online. And then also my known account is going to be sitting there. Okay. So remember, that's why I said you're doing this because you're borrowing the money so that way you can go and spend it how you need to. So now that $10,000 is in my checking account, now I can go and get my furnace fixed. Now I can go and buy what I need to buy for, the holiday season, Thanksgiving, Christmas, starting whatever, right? And so now, because I have this loan and we already calculated a $10,000 loan at 2.25%, your monthly payment is on average $176.37. So now when I I did a 5-year term. So let's also say that. Term. Oh, did I put that in the calculator? Okay, yeah. I put 5 years. I want to make sure. So term, 5 years. Really, it's going to say 60 months. When you do loans, they go in months. They don't really say term. So let's say 60 months. 5 years, which is 60 months. Right? Because that's really how loans are kind of broken down. Okay? So now I get to go do whatever I want to do with the money. And now I'm paying myself back. So every time I make this $176 payment, some of that money is going to be available again to me in my savings account. Okay. So let's say this is, I did my loan in May. So June, July. So let's say your first payment is due in June. So you got June, July, August, right? So your payment is $176.37, $176.37, $176.37, $176.37, right? But every time you make this payment, the money in your savings account is going to start back growing. So in month one, you may see, I don't know, it's going to be off a couple of dollars because they're going to take off interest. So out of 176, let's just say 170 is available again in your savings account. So now in June, you got 170 in your savings account. Okay. So now in July, right, the next month, if you don't touch the money, it'll keep growing. So 170 times 2 is 340. So now you make your payment in July. Now your savings account has $340. Okay. And this is going back into the savings, right? So now you're building the savings back up. So now you got 340. August, you make your payment 340 plus 170. Remember, I'm taking a couple of dollars off because of the interest, because the full payment is not going to be available. It's going to be a couple of dollars difference. So I'm just rounding it and saying 170. So now 340 plus 170 is 510. So in 3 months, now you have $510 sitting in your savings account again. And it's going to keep growing. It's going to keep doing it, right? Because again, every time you make this monthly payment to yourself, to the loan, you're technically also going back and it's building your savings account back up. So by the end of the year, right? By the end of year one, by the end of year two, by the end of year three, on average, on a $2,000 loan, a $10,000 loan over 5 years, on average, you're paying about $2,500 a year back into your savings account. Okay. So after year one, you got year two, year three, year four, and year five. Right. So you, by the end of year one, you should have about 2,500. Now, what should I have by the end of year two? How much should I have in the savings account by the end of year two? I want to make sure you're getting this properly. I'm going to wait for somebody to answer it. Remember, we borrowed $10,000. I just messed y'all up. That's not it. I just thought about $10,000 over 4 years. $10,000 over 5 years is going to be $2,000 a year. 2, 4, 6, 8, 10. Why y'all let me do that? I messed y'all up. So it's 2,000. I really just gave you the answer right there. I'm sorry, Malcolm. You're right. Your answer is right, but technically I messed up because I was calculating it over a 4-year term. But if we did the loan at 5 years, what would I have in my savings account at the end of year two? But Malcolm, your answer is right, but because I had to change it, I had to pay attention. So retype your answer for me, Malcolm. Come on, aesthetics guru. So what should I have at the end of year year three? How much should I have in my savings account at the end of year three? Y'all know it. Y'all got it. Let's roll. End of year 4. How much we gonna have in the savings account at the end of year 4? Correct. Okay. Right. End of year 4, we at 8. And then what's the last amount that we're gonna have by the end of year 5? So at the end of year 5, the full 5-year term, how much will we have at the end of year 5? There you go. So do you understand how we got here? Do you understand how you took the 10,000 that you had, you called the bank, you got a loan for the 10,000, right? And then that same day or the next day, they're going to give you access to that 10,000. It's going to be available in either your checking or your savings account, whichever one you decide to put the money in. All right. Remember how we started off with $1,000 on Monday? But then on Tuesday, we have $11,000 in our account. And this is how we got here. So you got to use the money. So on Tuesday, now I can go and do whatever I want to do with this money. Spend it however I want to spend it, right? But because we have this loan now and we're paying ourselves back every month, right? Our payment is $176.37. We did a 5-year term, which is 60 months. Our interest rate was 2.25%. Okay. So that came out to $176.37. So every month that we pay the loan, we are rebuilding our savings account back up because majority of this money is going back into your savings account. All right. So at the end of year 1, we got 2,000 sitting there. By the end of year 2, we got 4,000. By the end of year 3, we got 6, right? So now you right back to having $10,000 again in your savings account. So you slowly built it up. Now, of course, if you pay it down sooner, you may pay the full 10,000 back by the end of year 2. So then you got 10,000, right? It's up to you how quick you pay it back. There's no prepayment penalty, none of that. This is the other thing that I love about this type of loan, right? And again, this is when it comes to, if you all have never thought about this, you can borrow your own money. There's nothing wrong with doing that. Some people say like, well, why would you do something like that? Maybe you're not the best saver. Maybe you got this as a settlement. Maybe this was your tax return money. Maybe you didn't save that 10,000, right? And so again, this is the conversation that I have with my clients being in financial services. The whole goal is for you to always have some form of money. The whole goal is for you to not be broke, to not spend your last dollar, right? So if you get a large tax refund, if maybe you get a settlement, maybe you get a payout, an insurance claim, whatever, right? Maybe you have some type of large amount of money and you want to hold on to this money. You don't just want to blow that money and spend it and it's gone, right? So some of you, how many of you have heard of this before? How many of you have actually heard of the bank terminology is a savings secure loan, right? A savings secured loan. With Navy Federal, it's called the pledge loan, but the banking terminology is a savings secure loan. You've heard of that. Okay. Have you ever used it? Have you ever utilized it? Have you ever had it broken down kind of like this for you to understand it? So I personally have used this loan several times. One, like I said, I have done it to build my own credit up. I've done it to put my own trade line on my name, on my personal name. As I've shared with some of you all before who know me and know my channel, I've shared with you that I don't have a lot of personal credit because everything that I do is in my business name, right? I know and understand business and taxes in this country. And so I don't use my personal name for much, right? I'm going to use my business name as much as possible because that's what benefits me living in America. And that's what I'm trying to share with some of you all tonight, that same kind of thing, right? So if I am going to use my personal credit, then I have a strategy. I have a reason why I'm doing these certain things, right? But a lot of people are not aware of this, even in 2024. A lot of people are not aware of this banking product that allows you to be able to borrow against your own money, right? So that way you're not depleting yourself. So in a nutshell, that's kind of just what I wanted to go over tonight with you all. As I stated, it's the holiday season is coming up, right? So if you didn't know, then you have time to go and get you a credit union account. You also have time to set everything up, set yourself up. And like I said, with Navy, now they doing everything the same day. When I did this loan 3 years ago, it took them 3 days to put the loan on the account, and it took them 3 days to issue me the funds. But when I did it, I did the loan, I want to say in 22 and in 23. Was it 21 or 22? Let me log into my account real quick. I can just see. But I did them back to back, and I did $30,000. So I did a $30,000 Save and Secure loan twice, right? Because I wanted to have higher credit limits on my credit report, and I wanted to show a paid off loan in a very short amount of time, because I was getting ready to apply for some business loans and funding. So I wanted to see a larger dollar amount, right? So my first loan, okay, I did it in April of 2022. So then I did the same loan the next year in May of 2023. So when I did the loan last year in 23, they deposited the funds the same day. So they put the hold on the 30,000 that was in my savings account, and then they issued the $30,000 into my savings account the same day. I didn't have to wait to Tuesday. So if I applied on Monday, the money was in my account the same day, right? And then I think the loan showed up the next day. Like I said, you can pay it off early too. And then the last part that I want to get before I answer your question, Malcolm, is the other thing I like about this loan is, God forbid something happen, right? Maybe you lose your job, maybe something happens to where you can't afford your monthly payments anymore, right? The other beautiful thing that I love about this, that again, you cannot do with a standard unsecured loan, right? If you borrowed $10,000 from the bank and you borrowed their money, and you said, hey, in year 3, I lost my job, I can no longer afford these payments. Well, they don't care. They don't want to hear that, because you still owe them an additional $4,000. You paid the loan off up until year 3, but year 4 and 5, you still owe them this $4,000. So what they're going to do, they are going to report it to your credit. They're going to put in a collection on your credit report, right? And then so that's going to mess your credit up, right? So now you have a collection, you have a bad credit reporting. They're going to report that you didn't pay the loan on time. So that's going to be negative to your credit score. Your score could drop 100 points, right? From that. But the beautiful thing, when it's a savings secured loan, because you use your own money, you can call the bank at the end of year 3 and say, hey, I can no longer afford my monthly payments. I just want to close the loan out. So guess what? They're going to close the loan out. So all that means is you still got some money back though, right? You still got $6,000 sitting here. So now what's happening is you're going to forfeit the other $4,000. So the money that you would have paid in year 4, which is $2,000, the money that you would have paid in year 5, which is another $2,000, which is going to be a total of $4,000, right? That's your balance. Now you don't owe that balance. They're just going to close the loan out. They're going to keep the money, right? Because they already gave you the money up here. You already got the money and spent the money. The money gone. You're just paying yourself back. You're just paying your savings account back. So if you say, okay, I don't got the money no more, they're just going to close it out. And so you forfeit whatever difference that you didn't pay. And now it doesn't hurt your credit. Now I will say, whenever you close an account, your score will drop. Let's be clear. All right. Whenever you close an account out, your score will drop. But then over time, after a couple of months, it'll go back up. Right. But it does that anytime you close out an account. Anytime you close a credit card, a loan, anything you close out, it's going to drop your score. Okay, Malcolm, let me go to your question now. So is the savings account earning interest? Yes, you are still earning interest on your savings account as well. Yes, because technically the money is still there. It's just not available. Right? Excuse me. The money is still there. It's just not available to you. So yes, you're still earning money on the funds that are in that account. And then your second question was, when they close the loan, are there any negative credit consequences? Okay, so I answered that before I even saw your question. So yes, so that's with anything though. That's why I wanted you all to understand that no matter what you do, if you close a credit card, a store card account, anytime you close an account that's been reporting on your credit report, you're going to see a drop in your score. But if you have other items reporting on your credit account, if you have other loans, you have a mortgage, an auto loan, other credit cards, if you have something that's reporting to your credit report on time every month, then your score will go back up. You know, probably within 90 days, your score should be back up. And then Tila says, this is great. Great, thank you. And then aesthetics guru says, I just closed the credit card account and my score dropped 8 points. 8 points isn't bad though. That's not bad at all, right? So I know you all probably can't see this. Yeah, you can't see this. Can you? Okay, there you go. So do you see right here? You see right now on my account, it says 0 at the top. But what does my current balance say? It says $24,000 is sitting there, right? It's a little blurry now. Hold on. Let me try to put it back. It was just there. Now it's blurry. There it is. Okay, you see that? So that's what it's going to look like, because the money is there. It's just on hold. So I'm earning interest on that money. So you're still earning interest on that money, right? So that was a great question, Malcolm. You're still earning interest on that money that's on hold because it's still there. It's just not available to you because you've already borrowed against it, right? But that's why I said, as you're making these payments, once you're paying yourself back, then the money becomes available to you, right? So it's not going to say 0 anymore after you start making some payments. I have another higher interest yield account. So whenever my money becomes available, I move it out. Navy Federal is playing decent. I think like 2.5%, almost 3%. But I have another higher yield account that pays more. So whenever I make my payment, I just move it out of my savings account and put it into that other product. All right, we got about 10 more minutes before people probably start arriving tonight. So as long as no one's here, then I will stay on with you all. So do you have any other questions for me while you have me on here? Okay. Again, quick recap. I am Patrice L Stewart. If you all are new here to my page and my channel, I have my own company called Tax Credit Academy. I am a tax and business strategist by trade. I'm also an activist. I am also very, 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 very much involved with empowering my community on financial literacy topics, where we talk about taxes, credit, business, right? And so tonight, with the holiday season coming up, this is not the last live I'm going to do on this, but I wanted to start back bringing this topic up with the Save and Secure loan, because I just feel like a lot of people still don't know about it, even though I've seen information about the whole Navy Federal Pledge loan and things like that. I kind of wanted to do an actual live breaking it down in real, terms, so you all could understand the value of it. Like I said, if may or may not be for you, right? This may not be something that fits you. If you're more advanced in financial services, financial literacy, then you don't need something like this, right? But we do have a lot of people that it is harder for them to save, right? And we do have people that come across lump sums of money and they may want to still kind of keep and maintain that money. So this is another way to do that. And like I said, you want to make sure that the biggest thing is making sure that you can afford your monthly payment, right? That's the most important part, because the whole point of doing this is not only just to build yourself back up for the credit, but you also, not build yourself back up for the savings, but you also are also doing a credit product. This is a loan, so it's affecting your credit. So you don't want to be late, right? You don't want to be late paying your loan. You want to pay your bills on time, because again, the whole point to do this is to help you, not hurt you. So if you're late and you don't pay it, that's going to be a negative mark against you. Okay. So that's why I said, if you cannot afford your payments, call the bank, close the account out, and you just will have to forfeit whatever balance that you have left because you can't afford to make the payment. But the worst thing to do is to allow it to go and report negatively, because now your score is down, and now that's a negative mark against your credit. All right. So we also want to create responsible adults financially. All right. The whole point of credit is a beautiful thing, but we do have to start having this conversation more on the importance of maintaining good credit, because when you do this, you get more. All right. You pay back the 10,000. Then when you want 30,000, guess who's going to give you the 30,000 unsecured, right? That's what happened with me. I put 30,000 up, paid it, got another $30,000, paid it. So when I was ready for my larger loan with them, now I was able to get that, right? So that's the whole point with credit. We have to understand credit's not something that you just burn up. Credit not a lick, and it's not free money. Okay. So if you get, people will tell you on here all day, oh, I can show you how, and I hate that term play. I'm gonna just tell you, I hate that terminology, run the plays and all that crap. Real people in financial services don't talk like that. I would never get on here and say, let's run a play. This ain't a play. This not a game. Okay. Finances, taxes, credit is real. This is not a game, right? So real people that are in this industry, we don't talk like that. We don't say run the play and all that goofy stuff. This is a banking product. Okay. This is something that can help you. Simple as that. All right. This ain't a game. But people do have different questions sometimes, and I just have to state that, because I hate that. I really do. I hate that terminology today. And that comes from these social media people that y'all don't understand. But real people in financial services, we don't talk like that. Guru, you say you helped me get my current pledge loan. This education is invaluable. Well, thank you, dear. I'm so glad that you took this information and you did something with it. Because it is. I love it. Like I say, I still use it. I'm probably on my 5th or 6th loan over the last 10 years, because it's just easier. For me, I can save, but I'm gonna say this. I in my mind, when I have something that I like in documentation form, I'm better with it, if that makes sense. Like, I could save, but it's almost like I know I may touch it a little bit because I did it. But if I have a commitment, let me say that. If I'm committed or I'm in some type of agreement, then I know, like, okay, I have to get this done, if that makes sense, right? So, like I said, and then again, I'm using it for other things, and I want those higher lines. So I think we're done. How long was I on? Okay, right under an hour. We made it. I didn't want the video to be past an hour. So if you all do need any assistance, right, my office is open. My company is called Tax Cred Academy. Our phone number It's 8668. If you all also did not know, hopefully you already filed your 21 and 22 taxes, but if you didn't know, this is your last year to file your 2021 taxes. Okay, so if you have not filed your 2021, the IRS only gives you 3 years, three years to get your refund back. So if you don't file within the next 2 to 3 weeks, the systems are going to shut down. Usually around November 10th to the 15th is when the IRS e-file system shuts down for the year, and then we can't file taxes again until January, okay? This is your last year to file 2021. Do not let your last year go and just let your refund go, because you cannot get any money after this year. After this year shuts down, they will not give you a refund, right? And sometimes some of you like, well, I owe. 75% of the people who come to me that owe, I usually get them out of owing, because again, you all don't know every single tax deduction that's available to you. So if you filing your own taxes on TurboTax, it might be time for you to come to a professional. Okay. But I'm gonna put my office number and my link on here. Everything that I do is always going to say plstewart.club/help. Okay. So that's my site on plstewart.club/help. You could book an appointment with me. It will have whatever current events that I have going on. I do have certain events that we put out there. It's all different type of appointments. You can join my email list on there. So for those of you that I was sharing earlier, if you needed to get the credit ebook that I pretty much created with the 20 credit unions, if you didn't want to look and research on your own what 20 credit unions do the Save the Secure loan, you can text me. So if you want, you can text me to that phone number and text what I want you to text. Credit union. Text credit union, and then we'll send you the information for it. Okay, like I said, I did create a ebook where you all are, where I can give you the 20 different credit unions. And then again, if you need something else, a consultation, I have a tax inquiry call on there. I have business inquiry calls. We set up your company for you as well. If you need your LLC or your corporation set up, we also do that. But there's a bunch of different services available on that link. So if you go to plstewart.club/help, then you can get assistance from me directly. I think that's it that I kind of really wanted to say. 2021 taxes, this is your last year to file. You also could still file 22 and 23, right? So my office, we are an e-file agent, an authorized e-file agent with the IRS. So I can file your last 3 years of your taxes electronically. We don't mail them in unless we have to, right? Unless you have something going on where we have to mail them in. Otherwise, we can submit them electronically. But I do want to say that again, this is your last year for 21. And that's it. We are getting ready to start. We have a town hall meeting here in Chicago tonight. So those of us that are in the group, all hands are on deck. We're getting ready to meet so we can plan what we're getting ready to do here in the city of Chicago. So just stay tuned, you all. Again, we are here to help, right? We're here to build. We're here to learn financial literacy. This weekend, I am going to go over a credit topic. So I'm going to show you all a credit letter that you can utilize and that you can get a lot of stuff disputed off of your credit report. I probably will come back on Saturday evening because I have a concealed carry class this weekend. So probably Saturday evening, I will come on and talk to y'all. Or tomorrow is Finance Friday. We might go over that topic for tomorrow. Finance Friday. We might do that tomorrow because I'll have time tomorrow evening. That's it. I'm out. I will see y'all in the next video. Make sure that you like, share, and follow the page and the channel. I'll see y'all next time.